Good morning, good afternoon, good evening, and welcome, depending on where you are on the planet. And welcome to today's Thursday, the 7th of April, Bull versus Bear webinar with Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through our usual run through in here today. First of all, just apologies, start late running. It's a little bit delayed in here on the start. I've also then not got everything fully opened up in here and ready for you. So you'll catch me on the fly and you'll see maybe me going through and getting to some of this stuff as we go through. So but we're going to go through the usual normal regular run through calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wire of what's happening on the macroeconomic, the fundamental, the geopolitical front at the moment, what's impacting markets right here, right now. And we'll take a look at some charts, what's going on in the charts and where we can potentially make some profit from today. So first of all, what we've had, well, looking back a day, let's pick the bones out of Fed. So Fed was obviously the most important thing yesterday. We'll talk about that shortly. Data-wise this morning, it's been fairly light. And the main feature we've seen is retail sales out of the Eurozone, actually dropping by 0.3%. So worse than expected. So it was up 0.3%, but expected up 0.6%. So that's actually probably a positive. It means that we're seeing a cooling, but maybe not an aggressive cooling. German industrial production as well, that's fairly significant, slightly beat expectations. So kind of mixed bag in here out of Europe in here so far today. Moving ahead into today, we have the regular weekly jobless claims number in just under 1 hour. Doesn't really move markets in here. So real focus and here is going to be on the FOMC members after we had the minutes yesterday. Are they going to be asked any questions at their speaking engagements, whatever they might be? We have Bostic and Williams up later today. So we're certainly watching out for what Bostic and Williams have to say, given what we've seen. And we've also got Treasury Secretary Yellen speaking prior to that. That's 10:30 Eastern time. So probably keeping an eye on that as well. See if Yellen's got anything to add in, maybe throwing some light. You know, she's obviously not a member of the Fed anymore. She was the chair of the Fed, but she may have something interesting to say regarding inflation, stagflation, who knows, right? So we'll be watching that as well as Bostic and Williams later on today. So really it was all about the Fed yesterday. So in here, Fed lays out plan to prune balance sheet by $1.1 trillion a year. March meeting minutes show monthly reduction of $95 billion. One or more 50 basis hikes viewed by many as appropriate. So now the curve, as we spoke about, is now starting to price in even more aggressive rate hikes, kind of starting to nail in. If we look at the futures curve, the CME tool now, look, 80% now for a 50 basis point interest rate hike at the May meeting, okay? And if we look out to the end of the year, we're looking, current target rate is 25 to 50. By end of the year, what we're pricing in, well, what's nailed on in here is up to 250 to 275. So we're talking about 225 basis points higher by the end of the year. And that's kind of the medium forecast, right? So I'm certainly looking for it to be 200 up from here and up to even 250 up from here. So a far more aggressive rate hiking cycle than we were anticipating, even a week or two ago, and far more aggressive than we were looking at in here earlier in Q1 of this year. So yes, we've got all of that going on. It was kind of already flagged to us yet the previous session when Laura Brainard spoke and kind of mentioned the fact about reducing the balance sheet and hinted at more aggressive rate hikes. Remember, we noted in yesterday's webinar, Brainard on the scale of dovishness is more of a dove. So it was a dove saying something very hawkish. Let's go and look at that. If I can bring up the ITC. It's on here, yeah, the Hawk Dove sheet from ITC in here. So we'll see on the Hawk Dove sheet, we looked at this yesterday. We've got Brainard in here. Well, actually, look, they've moved Brainard down, actually. Look, so even 2 days ago, we had Brainard. So they've rejigged this already. We had Brainard up here. So Brainard, they've put a nod to her latest statements, moving her down in the pecking order from, she was about below Kashkari. Kashkari is a Uber Dove. So, but moving, she was just below Kashkari in there, and now Brainard all the way down here. So who did I say we have today? We had going in today, we have Williams and who was it? Bostic, right? Yeah, Williams and Bostic. So if we look where Williams and Bostic are in here, Williams is a dove. Okay, so watching out, a dove. If Williams also shifts to a far more hawkish stance, as Brainard did, then we might see Williams moving down in this table, and that would be impactful as well. Bostic, not so much. Okay, Bostic also a non-voter. Williams a voter at the moment. You see in here, 2022. A Bostic a non-voter at the moment, so that's significant. But nevertheless, interesting. They still have their input into the FOMC meetings, so it'd be interesting to see, if Bostic is uber hawkish, or maybe Bostic. What if Bostic is a little bit more dovish than anticipated? So we're certainly going to be keeping an eye on that. It's a useful tool. I would certainly be bookmarking this if I was you guys. Okay, so yeah, so that was the main takeaway from yesterday. And what did we see in here? Actually, let's go back to here. So we saw bonds continue to go lower yesterday. So bonds, we looked at yesterday anyway. Bonds have been selling off. They saw an aggressive sell-off. So remember, selling off to lower prices, higher yields. We looked at this in yesterday's webinar. If I can maybe bring up the yield chart in here, it's going to be interesting. We'll look at the price chart in a second on the futures. But it was in the investing.com in here. Let's see if we give me the... No, I don't think I'm going to get it there, am I? I was hoping I could go straight to the yield curve in here. Oh, that didn't work very well. Let me see if I can quickly find it in here for you guys. Investing.com. I think we had it down there, actually. Let me just bear with me a second here, guys. Rates bonds. Here we go. So here we have bonds, 10-year bond yields in here. And we go and look at yields. So what we're seeing here, like today in here, yields back lower in here. So if I pop out the chart and we'll switch it to a candle chart or a bar chart in here. So you see that there was a Brainard. That was this long green bar here. Okay. An aggressive move higher with Brainard. So we can put a candlestick on. So there's Brainard, and then yesterday we were already up here somewhere, right? We were trading, I think, like 262, 63, something like that when we were on the webinar. So we did go higher in yield, but then look, came back again, and then even today, so back to a lower yields. So you could argue yesterday's price action was like we'd already had been signaled by Brainard. Yesterday's price action, that's potential for that to be a very short term, maybe blowout top. Okay, so this candlestick in here is a shooting star candlestick. If we went lower today, if we started to undercut the lows from today, then that would kind of start to confirm that candlestick, and then we'd look for a move back down, lower in yield, higher in price, and then that could actually help the stock indices out, which obviously got significantly damaged again yesterday, given that we had Brainard back on, what, I can get my days mixed up, Tuesday, Brainard's comment on Tuesday, and then with the Fed meeting minutes yesterday, both pointing to a more aggressive rate hike, potentially 50 pips, and then more aggressive rate hikes going forward, and then also looking at the fact that we had them confirming the balance sheet reduction. Both of those things, saw yields go higher and stocks go lower. And what got hit the most? No surprises. The Nasdaq, right? The Nasdaq over the last two sessions has been the big underperformer. Why? Because it's Nasdaq is full of growth stocks, and growth stocks are more sensitive to higher interest rates. Okay, so they tend to be more negatively impacted when we see a higher interest rate environment. So hence the more aggressive sell-off in the Nasdaq, down like 4 or 5% in here now over the last two sessions. But again, with this slightly, you see in here, we're actually nudging back higher in yield, so lower in price. We'll take a look at that on the actual chart in here, so as well. So if I'm not logged in yet, just give me a sec. Log into Tradeovate here. And we'll see, go look at the bond chart first of all. Just pop this a bit bigger for you guys and go look at the daily chart. So there we go. So there's a sort of similar price action. Yeah. So so there's Brainard, there's the sell-off in price, and then a rebound going into the closing here yesterday. And then the market has been up, but then dropping back low. What you really want to see is if we see this bond future or the yields pushing back above the high prices, low yields in here that we've seen already today. So on the bond price in here, on the June future, we're talking back above 121.06.5. Pushing back above there will start to confirm a basing pattern. And then similarly, if we go back to the yield chart, what you really want is to see the yield back down below the current low yield. So the current low yield today was at 255.56, 256 really. When it back below 256, we're up at 261.5 at the moment. So below 256 on yield would then point this lower. It would confirm then the shooting star pattern, and then would encourage a lower yields, higher prices on bonds, and then should encourage stocks back to the upside. We'll return to the chart second. Just wanted to highlight that. So this was the main thing we saw, yesterday on the price section, and then going into today. Look, so futures bounce. So we have had a bounce in, when they say futures, they're talking stock futures. It's bounce back with stocks. Stocks indicated to maybe rebound and open up a little higher in here today. That's what we're looking for. A little bit higher, but not too much. I mean, the markets had rebounded. Nasdaq was up about 0.5% not too long ago, only about 20-30 minutes ago. It's only up about 0.25% in here at the moment, and the Dow Jones is pretty much unchanged, and the S&P is up about a tenth on the futures. So the market kind of a little bit showing a little bit of vulnerability still in here at the moment. It has rebounded stronger so far this morning. Still a fairly shallow rebound considering what we've seen in here. So we've had those certainly going on. Also, remember, got the backdrop of the sanctions as well in here. Backdrop of sanctions in here, potentially further sanctions coming from Europe and the US, and that on Russia. And that could have a negative impact again in here. And just going back in here, so yeah, Reuters covering the same thing in here. So bond yield snapped 4-day rising streak, offer respite to stocks. So that was from this morning. But again, it was, as we just looked at, that was like half an hour ago. That 4-day, trying to snap that 4-day losing streak, and the market at the moment is kind of going back into higher yield, lower price territory for bonds. So we're certainly going to be keeping an eye on that bond chart today. It has been a driver so far. And if we look at what we're doing so far in here this morning, starting off with Europe. So we have had a rebound in European stock indices. Go and have a look here. So you can see most European stocks is about anywhere between unchanged. So the FTSE is unchanged. FTSE has been very resilient actually during this whole downturn that we've seen in US stocks. But if we look at elsewhere, we're up, about between 0.5% up to 1.5% up on the day today so far. European stocks. If we look at the futures, as I say here, we're slightly higher on US futures. Significant sell-off yesterday on the indices. Why won't this scroll up? Doesn't want to scroll up. Oh, there we go. And you see in here, look, so Dow's pretty much unchanged. We're only up about a tenth, just over a tenth on the S&P. The Nasdaq's up only 0.25%. That was up, 0.5% only, and the S&P was up like, 0.2, 0.3 in here just a little while ago. So they've given up a little bit, just literally in the last 20, 30 minutes or so, and maybe last 40 minutes or so. And again, in here, focus from bond sell-off takes a breather for time being from as well in here. So, but again, we're seeing at the moment, seeing a reversal of that. So some of these are a little bit out of date. Already mentioned this in here, already gone through that. So let's take a look at the charts now, really. So I think the thing to watch today, I think, is eyes on this future, either on the futures chart, if you can watch the yield chart as well. You need live prices. So don't bother you looking at the yield chart if, I think this investing.com chart has probably got a delay on it. I'm not 100% on here, but I'm pretty sure it will have a delay. It's not going to be probably a live chart in here. Maybe, but I doubt that's going to be a live chart. So I think, your best bet in here is keeping an eye on the future. I was telling you the same thing anyway. If this bond future, this 10-year note in here starts pushing back down, giving up, I would say, half of yesterday's gains. So if you look at what we've done from yesterday, if it starts giving back half of those, let's zoom in on a 30-minute chart. Now, if it gets back down in here, this kind of area here, you can see there's the recovery, it's rolled over. If it starts pushing back down into this kind of zone in here, like 120. So in price terms, 120, 15, 16, 17. It gets down here, it's really vulnerable to another move lower. Okay. However, what I'll be looking for now is as we go into the cash market opens, into bond market, cash markets, and then we move on to the US US stock cash market opens, and we're looking for this to start to turn. Yeah. So as the US starts this day in earnest properly, then we're looking for this to try and turn in here, bonds to go back higher in price, and that should then end up helping the stock indices in here. So here's the S&P. It was already down significantly yesterday, even further. Now, interestingly, in here we were looking at these Fibonacci retracements. Look how well we held, like right on this fib in here. Now, if you look at my reports in here, you go to the members area, look at the reports. I've switched negative on the S&P. There's no way I couldn't switch negative on a day trade. We're being down, what it is, 1, 2, 3, 4, 5. The last 6 days we've down 5 of the last 6 days. It all looks very negative, right? You've got lower lows and lower highs. We can see that if we can step into the 15-minute chart in here. However, the market's trying to form this base. You could argue in here, look, you got this spike lower in here. This is probably going to be around the Fed, I should imagine. It's around the opens yesterday and around the Fed. But you've got the initial move lower. You've got this spike down in here, and then you've got the low move lower in here today and then rebounding. So you've effectively got potentially a triple bottom, right? 1, 2, 3 lows. Okay. Now to confirm that triple bottom, it needs to get above the interim high. Now on the S&P, that interim high is there, 44.99.5. So you want to put a 45 big figure back on this, right? Above 44.99.5, put 4,500 on this. Then this will look like a little triple bottom, and then it opens up the upside. However, you can see the market in the last, what's this, 15-minute chart in the last hour or so has fouled just below that level, so it's not going to make that more positive statement before the cash market opens, I should imagine. So looking for the market to stabilize in here. But if we can push above, you can get that 45 handle back on this, I think I'm going to flip bullish in here, because there's you've got a basing pattern going. How much of the bad news is in the market? We're pricing in 10 to 25 basis point hikes. We're pricing in hikes right the way through all the meetings. You're getting close to pricing in 50 basis point hikes, going forward, for most of the meetings now for the rest of the year. A lot of bad news, a lot of hawkish news has been built into the treasury bond market, okay, and into the euro dollar curve, into the euro dollar. It's not euro versus the dollar, that's the euro dollar curve, the short end interest rate curve. So we've had a lot of, that's what that CME tool measures. So you've had a lot of negativity on the rates front built in. From the, obviously, I haven't really spoken about the last couple of days, 2-3 days. I haven't even spoken about really Ukraine, Russia, right? It's kind of been very sidelined now. All the focus has come back to dealing with the aftermath of, the fact that we've had this trigger higher in inflationary pressures and the central banks, joining the party, as it were, and starting to get on track to hike interest rates more aggressively. So, yeah, I think there's a lot of bad news built into the markets. If we don't get anything coming through negative, if anything, what we're seeing is positives coming out of the situation in Ukraine with respect to Russia pulling back. Now, are they pulling back and regathering? Are they just putting their troops to go move forward on different fronts in the western parts of Ukraine? Are they just going for resupplies? We don't know, obviously, but the fact that they've backed away from Kyiv is certainly deemed as a positive. So you can get further positives coming through. So you've got potential for positives coming through. You've got a lot of negatives from the bond market, from the interest rate markets built in. So is that enough built in already? We're going to need another real negative shock in here for these stocks indices to go lower, I think. So at the moment, I think what we're looking for is potentially for this market to, I'd have to be bigger picture bearish, play it maybe from the bearish side. I'm happy to have a short on whilst below the 45 handle, the 4,500 handle. But if we get above that high, so like 44.99.5, you start printing low 45s in here. I think then it quickly turns very bullish in here. And you've got kind of similar story if we go take a look at the Nasdaq. And then, just going back to the the S&P. Importantly, look, you held at the 38.2% retracement. It's held at an important retracement. You can see also here, you've got some lows in here, some important swing lows from earlier on, on these daily lows in here. If I go back to an intraday, maybe just take it a little broader, go out to, I don't know, 1 hour chart, we should be able to see those lows. So those lows there, look. So these lows in here, the market's held around these lows in here. So it's almost held exactly. What's the low there? The low there, 44.75. I've got that on my daily report. And the low here, 44.5. So it just pipped below that low, like literally by 0.25. Okay, a quarter of an index point. We got below that low there. So, and then held. So potential base forming here. Similar story for the Nasdaq. I'm not going to go into as much detail, but again, look, bang, right on the 38.2% of the rebound in here. Came back from there. Let's zoom in. This is 5 minutes. Let's zoom out a bit from that. Let's go for 15 on the 15-minute chart. Again, look, 1, 2, 3. Almost like a quadruple bottom in here. Low here, low here, low here, low here. Okay, so certainly looking for potential basing pattern, but again, it needs to get above here. Where's the magic number here? Top side, 14,652.75. That's what we need to get. Look, you see this other high here. That's where we need to get above. Obviously, it's roll back lower from here. So again, you can play it from the short side whilst below here. If it gets above here, I think you have to play it from the long side. So for now, potential small mini short, but I'll be really watching what happens on those cash market opens. Okay, and remember, don't forget as well, not only cash market opens, but going back to the calendar, we do have Yellen, we do have Bostic, we do have Williams all speaking today. Okay, so keeping an eye out for what they've got to say as well, monitoring their speeches, monitoring any potential Q&A that comes through. Right, due diligence. Let's though take a look at the commodity markets in here. I'm going to start off with one that you hear me saying all the time: no strong view, still no strong view. Look, another doji pattern. See his doji pattern yesterday. Basically, no body, long tail, and a long wick in here on the candlestick. Doji pattern, sign of indecision, caught in this range. Did say to buy it yesterday for a little pop higher. We are nudging higher, so buying towards the bottom end of that range. But there's so little in this; it's so difficult. We go into I've got a 5-minute chart, and then it's going to back off and go to 15-minute chart. But look, we were talking about yesterday buying it down here, so we did have the opportunity to buy. It's back up here. How much would you have made out of it yesterday? Probably very, very little. Is the risk reward adding up wherever you're going to place your stop? Probably not. Hold a gun to my head. What am I going to do? We're kind of trying to break out of this little range in here to the upside. Yeah, I'd probably want to be long, but only tentatively long in here. So upside potential there on gold. Let's take a look at oil. So an oil, significant sell-off yesterday, lower again this morning, a little bounce in here, the lower lows and lower highs. I think the bounce is potentially a sell opportunity on oil. And here if we go in on oil, so look, there's the breakout. Do you remember we had this consolidation range we drew yesterday? We were looking to go with a breakout. We broke down lower through the range, went to the new low in here, and then actually back lower again, trying to form actually formed a little double bottom in here now. Low here, up through these peaks here and here, these two peaks, see these two peaks, up through there now. So I think very, very short term risk up, maybe into here. If you want to then wait for it to roll over at some point, I think there's a short. So I think there's maybe 2 trades in here. Much shorter term, maybe it's the next 30 minutes to an hour, probably from the long side. Going forward, I think there's risk that it rolls back over. It starts to roll. You find a point as it breaks down through support to sell through, and then maybe back down to the lows and maybe even deeper. This thing's moving, right? It's moving. It's chucking around at what, yesterday's range was high-low was nearly, God, we're getting on for like $8 or something like that, nearly 10, no, 95.73. So yeah, so over $8, over an $8 range. So this could easily break back down from here, back down towards like 90, right? And then you got these lows over here. So maybe back down towards the low 90s. But for now, it is looking to me a little bit positive. So looking for a push up into here, but then potentially for a roll lower from there. All right, guys, I'm going to wrap it up there. I'm going to wish you all, as ever, a wonderful, great trading day. Please do stay safe and take care. And I'll be back with you with another Bull versus Bear webinar tomorrow.